Hello there. Welcome to O-Level Principles of Accounts. We got a question paper that we want to look at today in preparation for our exams. This is paper 1, multiple choice from November 2022. So we are going to go through this question paper together. Remember, I hope this is going to be beneficial to you. Let's go to the first question. The first question reads, which business is classified as a service provider? So remember, a service provider is the one who provides intangible services. So here we are not looking for any business that is giving tangible products. So remember, tangible products are those products that we can see and touch, and then those intangibles are the services that we cannot see. For example, hairdressing is a service. So we go through and try to see which one is a service provider. If you look at the first one is saying a business which repairs vehicles. A business which repairs vehicles. So here there's an issue of repairing, which means repairing is not a tangible product. So it becomes a service. So it means A is correct. Then you go to B. B is saying a business which sells lubricants, oils. So you'd see that there is an issue of selling lubricant oils, which is something that we can see and touch. So it makes this one not correct. And then we go to the next one, which is C, saying a motor vehicle dealer. So a motor vehicle dealer does the buying and selling of the motor vehicles. So motor vehicle, obviously, this is a fixed asset which is tangible. Then we go to the last one, a spare parts supplier. So there's an issue of spare parts here. So we have got an issue of having a tangible product. So we are left with A. So A becomes the most appropriate response that we have there, being a business which repairs vehicles. So this one is a service. So this one is correct. Then we go to the next one, which is number 2. Number 2 is saying which wage is missing from the following accounting cycle. Remember, we've got the accounting cycle that we have in the business cycle, which starts from a transaction, right? So on the first part, we have got a transaction. Then the part that they are asking is here. That's where they are asking. So from transaction, where do we go? Then from there, we go to subsidiary books and then ledger. So we've got our responses that we have there. We'll go through one by one. The first one is saying income statement. So you'd see that an income statement is a financial statement. It comes after the trial balance, after preparation of the trial balance. That's when we are going to have income statement as a financial statement. So this one is out. Then we go source document. Source document is correct because whenever there's a transaction, it's going to be supported by a source document. Examples of source documents that we have got receipts, bank statements. We also have invoices as examples of source documents. So those ones support a transaction. They come as evidence that a transaction has taken place. So source documents is correct. But then we can go through and look at the other responses that we have. We've got statement of financial position. Again, this is a financial statement, and the same as income statement. They come after the trial balance. Then we've got the trial balance. The trial balance, we know that's a list of the accounts that we have balanced in the ledger. So this one is also not correct. So that is what we have for number 2. We move on to the next question that we have there. We go to number 3. Number 3 reads, number 3 is asking us there of the disadvantages of using computers for generating accounting data. One of the disadvantages of computers for processing accounting data. So the responses that we have, we are going to look for a disadvantage. So make sure that the answer that you are going to pick here is not an advantage. So the key term that we have in the question there is that it's looking for a disadvantage. So if you go on the first response on A, is saying computers are expensive to install and maintain. So which is true. So this comes as a disadvantage because they are expensive. So it becomes a disadvantage. So this one becomes correct. So we can go through the other responses and see. B saying computers can store large volumes of information. We can see that this is coming as an advantage, that it is storing large volumes of information. Then we go to C. C is saying computers can process information quickly, which is an advantage, again, not a disadvantage. Then we go to D. Computers can provide accurate information. This comes also as an advantage. So we are left with A there. So A becomes our correct response there, which is computers are responsive to install. Computers are expensive to install and maintain. So that one becomes the most appropriate that we have there. Then we go to the next one. If you go to number 4 is saying a trader bought goods for 30,000, less 10% trade discount and 5% cash discount. The credit purchases were. So here we are given that the figure that we are given here is 30,000. And we are told that there is 10% less trade discount. And also we have got 5% cash discount. So let's start with trade discount. Trade discount, we know that this is not shown in the books of account. So whenever there's a trade discount, it's not shown in the books of account. We just calculate and remove it. So here we're going to calculate and remove it. And then after that, that's when you calculate the cash discount. Remember, cash discount, we've got 2 types of cash discount that we have, that are discount received and discount allowed. So these ones are shown now in the books of accounts, the cash discount. So here we are going to calculate there the proportion of trade discount. Then we remove it from 10,000. Then the remainder is going to represent the credit purchases. So what we are going to do there, we're going to say 10% is 10 over 100. Then we multiply by the figure that we are given, which is 30,000 over 1. So if you do that, you are going to get 3,000. So this is the trade discount that doesn't have to be shown in the books of accounts. So you have to remove that 3,000 there from the amount that we have. So we are going to say 30,000. Then you multiply by, then you subtract 3,000. So there, obviously, you are going to get, obviously there you get 27,000. So that is what we have there, 27,000. So they are the most appropriate there. 27,000, we are having it at D. So D becomes the most appropriate that we have there. So we move on to the next question. We move on to the next question that we have there. So the next question that we have there is number 5, which is saying which source document is issued when furniture is sold on credit. So we know what happens when there are sales that are taking place. The payment is going to be through cash, or the person is, or the business is going to pay by check. So we are going to have cash, check, or the selling can be on credit. So when it's on credit, the source document that is supposed to be given there is an invoice. So invoice is the correct response that we have there. So we have invoice on C. And then if you look at the credit note, a credit note is issued when we sell goods on credit, and there are returns inwards. So a credit note is issued there to reduce the amount of sales that we have done. Then debit note is issued when we buy goods on credit from our creditors. Then we have to issue what is called a debit note. That is going to also reduce the amount that we are owing to a supplier or a creditor. So that's a debit note. This is what we have, and obviously we have got a voucher that we have there. A voucher also is not it does not support sales on credit, because a voucher actually indicates that there's a less amount that is going to be paid there, which doesn't explain that. Right? That is what we have on number 5. Then we go on to number 6. Right, on the next question on number 6, the question is saying motor van bought on credit from ABC Motors is recorded as follows. So here there's an issue of buying motor van there, and then it's on credit. Very important to take note there. So whenever we buy on credit, we are going to open the name of the person or the business that we are buying from. We open the name of that business or person account. So here we are going to open an ABC Motors. So ABC Motors is going to be one of the accounts. Then we also have a motor van account. Then here we can just use that basic principle that we debit the receiver and then we credit the giver. So the receiver here is the motor van, because we are receiving a motor van in the business. So motor van obviously is going to be debited, and then the opposite is true. That is we are buying from ABC Motor, so we're going to credit ABC Motor. So if you look at the responses that we have, debit motor van, and credit ABC Motors is on C. Then so C is our correct answer. Then we go to number 7, which error is reviewed by a trial balance. So remember, we've got errors that are reviewed by a trial balance and the errors that are not reviewed by a trial balance. We've got them examples of errors that do not reflect in the trial balance. We've got an error of principle, error of commission, complete reversal of entries. These are some of the errors that do not affect the balance of the trial balance. But the question here is asking for those that review. If we go through the response that we have, we have got discount allowed and discount received. We have both overcast. So we are saying this is an compensating error. It's not going to affect the balancing of the trial balance. Then we've got furniture bought on credit from Peter. Furniture bought on credit from Peter for $245 was entered in the books as 254. So this one becomes an error of original entry. We are entering 254 on the debit and credit, so the trial balance won't be affected. Then we go to the next one. Goods sold to Tendai for $1,500 were only recorded in Tendai's account. So this one we didn't complete the double entry concept. We didn't debit and credit. We only recorded in one account. So this one will affect the balance of the trial balance. So this one is correct, which is C. Then we can look at the last one. Office salaries of 300 were debited to the office equipment. Remember, this amount 300 was supposed to be debited to office salary, but was debited to the office equipment. So the trial balance is going to balance because the amount on the debit side, remember, trial balance just adds the totals of the debit and totals of credit. So the 300 is still on the debit side. So it's going to be added on the debit side. So it's also going to debit. So it's also going to balance. So it makes D out also. So we are left with C. So we move on to the next question that we have there. Then the next question is saying a trader created an allowance for bad and doubtful debts. This is an application of which concept? Remember, bad and doubtful debts is an expense, and this is a non-cash item also. There's no money that is being paid there. So, but we are giving an allowance that we are incurring an expense. So what we are doing is we are reducing the amount of profit that we are going to get for that period. So the most appropriate concept there is prudence. Remember, prudence entails that we do not have to overstate profits, but we have to realize that we are going to incur an expense as soon as we see that that expense is we are going to incur it. So prudence explains this element of charging the provision for bad and doubtful debts. So prudence becomes the most appropriate that we have there. Of course, we have got some responses that are there. We have the going concern. The going concern explains that the business is going to operate for the foreseeable future. We do not have to operate a business with a mind that is going to we are going to maybe stop operating in the near future. We just assume that you are going to operate for the foreseeable future. Then we go to historical cost. It entails the recording of assets that assets has to be recorded at their cost price, that price that they were bought, not at their market price. Market price being the price that they can be sold today on the market, right? Then you go to matching. Matching explains that we have to match expenses and revenue in the same period that they belong. That's why we charge for we adjust for prepayments and accruals. Remember, for prepayments, if it's an expense, we subtract that amount for prepayment, because we are saying that amount is for next period and it was paid this period, but it doesn't belong to this period, so we remove it. So we are trying to match expenses and revenue. The same to accruals, we add, because we are saying this expense we didn't pay it this period, but it belongs to this period. That's why we paid. So that one explains matching concepts or matching principle. Then we move on to the next question, which is number 9. Right. If you go to number 9, it says a trial balance totals failed to agree. Totals debits were greater than 200. The balance transferred to the suspense account was We are being told that the debit is the greater with 200. So basically, what you have to know is that the balance that you start with in the suspense account should be on the side with the lesser total. So here the debit is a greater side, so it means the credit has got a lesser. So we are going to credit in the suspense with the $200. So A becomes the answer that we have there for number 9. Then we go to the next one, which is number 10. If you go to number 10, number 10 is saying an increase in the provision for bad and doubtful debts will. So we have to know that when there is an increase of provision for doubtful debts, this is an expense. That is, we are supposed to know that. Then we have a decrease. A decrease represents an income. So what it means in an increase, you are going to put it under operating expenses in the income statement. Then a decrease, we put it under other income. So that's what we have in terms of provision for that debt. Then the responses that we are having there, we are having a decrease. A is a decrease in the gross profit. Remember, this provision for doubtful debts is adjusted after gross profit, so it's not going to affect the gross profit. So this one is automatically out. Then we've got a decrease the net profit. This is correct because we are going to put it under operating expenses, and operating expenses are going to decrease the net profit. So this one is correct, decrease the net profit. So this one correct. Then if you look at C, increase the gross profit. So this one is not correct. So I'm going to increase the net profit. It's not correct again. So we are left with B. B is the answer that we have there. Then go to number 11. A provision for paid and doubtful debts is created to show this is a possible. It's an allowance that is given on the provision for paid and doubtful debts. So it's not actual. So the response that we have for A and B actual are out, and then we are left with C and D. Possible, possible paid debts, and then possible debtors. So these are not possible debtors. When we say possible debtors, we are saying we are going to sell goods to these people, which is not true. But possible paid debts, we are saying now giving an allowance that these debtors are out of the debtors that we have. What proportion do we think of the debtors that we have are not going to pay back their amounts and they become bad? So that's why we call them a provision for bad and doubtful debts. So this is possible bad debts. So answer here that we have is C. Then we move on to the next question. We can go to the next page now. Right. If you go to the next page, there. So if you look at number 12 now, number 12 means pending costs for a new building were shown in the income statement. That was what was the effect of this error on net profit and non-current assets. So remember, these are pending costs. These are pending costs, and they are for a new building, which is very important to note. They are for a new building. So this becomes a capital expenditure. This is a capital expenditure. And then the question is, what was the effect of this error on net profit and non-current assets? Remember, capital expenditure is not entered in the income statement. So it means the figure for operating expenses was higher because of this inclusion of the capital expenditure. So the net profit was decreased. So we've got a decrease. So a decrease is on A and B. So we are left with A and B. Then we look at on non-current assets. So we are saying capital expenditure increases the value of a non-current asset. So the value that we had on buildings was a lesser value. So it means it was also decreased. So non-current assets were also decreased. So we are having A as our answer there on number 12. So 12 we have got A. Then we got 13, which item is included in a creditors control account. So we know a creditors control account is a summary of the creditors in the purchase ledger. Then we prepare creditors control to check the arithmetical accuracy and if there are any omissions that were made any error that was made in recording them in the ledger. So this comes as an internal control measure that is done by businesses. So we see that the first one is saying cash purchases, which is not true. Remember, we are looking at only creditors. So cash purchases are entered in the cash book. So we do not enter them there. So this one is out. Then we got credit purchases is correct. Credit purchases is correct. So this one is correct. Then we go to C, discount allowed. Discount allowed is given when we sell goods, we give a discount allowed. So it's not in the creditors. Creditors dealing with only purchases, not sales. Then the returns inwards. Returns inwards is when we sell goods, then goods are retained, they become returns inwards. So these are sales returns, and they are not part of our creditors. Most on creditors, we are only dealing with purchases. So this one is out again. So B is our correct answer. Then we go to number 14. Number 14 is saying which of the following increases the bank overdraft in the cash book. So remember, if we are in the cash book, we have got a cash book here. If it's an overdraft, it's a balance that we have on the credit side. So the balance will be on the credit. Remember, an overdraft means a negative figure, and it's a negative figure on our bank statement showing that we withdrew money that is more than what is in the account. For example, you've got $100 in the account, then you go and withdraw 120. So it means we have withdrawn more than what is in the account. So it means if you say 120 minus 100, you are going to be left with a negative 20. So your balance will be a negative on the bank statement, and in the cash book, we show it as a credit balance. So if you look at the responses that are there, the question is looking for an increase in bank overdraft. Bank charges are going to be on the credit side. So this is an expense. So it's going to increase the that overdraft, which is correct. So that A is correct, but you can go on and look at other responses that we have. We have got credit transfer. Remember, credit transfer, the word credit is being referred to what is happening in the bank statement. So what is being credited there is the bank statement. Remember, when you credit the bank statement, in the cash book, you'll be debiting. So the credit in the bank statement is a debit in the cash book. So this one, credit transfer will be on this side, the debit. So it's going to reduce the overdraft. Then you go to dividends received. It's also supposed to be entered on the debit side of the bank statement, and in the case, so on the credit side of the bank statement, and then it's going to be on the debit side of the cash book. So it's also going to reduce the bank overdraft. The same to interest received. So we are left with A. Then we go to number 15. Right, on number 15 there, they're saying Abundant Sports Club provided the following details: subscriptions received, and then we've got profit disposal, club secretary expenses, then we've got club subscription for the year. So the question is asking the excess of income over expenditure. So here you see that this one is an income, so it's a positive. This subscriptions received, it's an income. Profit on disposal of furniture also is an income. Club secretary's expenses. Now this one is an expenditure, so we're able to show it as a negative. Then you've got club distribution for the this is an expense again, negative. So here now we are supposed to say 7,900 plus 500 minus 400 minus 300. So if you calculate that, you're supposed to get 7,700 as a positive figure. So this one, C, is the correct one. So if you go to the next question now, we are now on the next question, which is number 16. Number 16 is reading, which of the following is a profitability ratio? Remember, we've got different types of ratios that we have. We've got profitability ratios, we've got liquidity ratios, we are supposed to know them. And also, we have got efficiency ratios. Those are some of the types of ratios that we have. So current ratio, remember, it's a liquidity ratio. Current ratio is a liquidity ratio. It's out. Net profit percentage, it's a profitability ratio. So profitability ratios, they are ratios that are calculated by figures that we are finding in the income statement. So we have got net profit percentage, which we are going to say net profit over sales or turnover. That one is a profitability ratio. Then we go to quick ratio. Quick ratio is also a liquidity ratio, the same as to current ratio. Then we go to rate of inventory turnover, becomes an efficiency ratio. It can be a liquidity also. To check the liquidity position of the business, you can also calculate using the rate of inventory 10 off. So B becomes correct. B is the one that is correct there. Then you go to the next question, which is number 17. Right, if you go to 17, 17 is saying which of A, B, C, or D shows the calculation of gross profit. Remember, gross profit, to get gross profit, we say sales minus cost of sales. Then you get our gross profit. The same now, when you want to find net profit, you are now saying gross profit minus operating expenses. Then you get your net profit. So we are going to see which one is fitting these formulas that we have there. Then we've got net profit. It's A, net profit plus total expenses, which is not correct, because if you say net profit, let's see number 17, net profit plus total expenses, it's correct, because if you make if you make gross profit the subject of the formula there, you are going to get gross profit is equal to then you are going to take operating profit to the other side, and it becomes positive. It becomes net profit plus operating net profit plus operating expenses. Remember, this is operating expenses. This figure that we have here is representing operating expenses. So here we are going to say here we have got operating expenses, and then here we've got operating expenses. So if you say net profit plus operating expenses, the operating expenses are the total expenses that we have there in the question. So this one is correct, which is A. A becomes correct. Then B, net profit minus total expenses. This one not correct. And you see that C is saying turnover plus cost of sales, not correct. Turnover minus total expenses, not correct. So our answer there is A. Then we go to the next question that we have on number 18. The next question that we have on number 18. Right, number 18 is saying office equipment bought for 45,000 was sold for 10,700. Was bought for 10,700. And then accumulated depreciation on disposal was 35,500. What was the profit or loss on disposal? Remember, we are supposed to open a disposal to find the profit or loss on disposal. Right, when you open that disposal, the cost of the non-current asset, you put it on the debit side. Then the bank or cash, you put it on the debit. The amount that has been received for the disposal of that non-current asset on the credit. Then the accumulated depreciation again of that non-current asset up to date is on the credit side. So you see now where are we having the balance. If we have got a lesser figure on the debit side, it means we're going to put our profit and loss on the debit, and then we credit the income. Sorry, then we credit the income statement or the profit and loss account. And when you do that, when you credit the profit and loss account, we are having a profit on disposal. Remember, in the profit and loss, all income come on the credit, and all expenses should be on the debit. All expenses should be on the debit side. So that's what we have there. In terms of preparation of the profit and loss. Right. That calculation, we can then be able to see if we have got a profit or a loss on disposal. Right. On the debit there, that's where we are going to have our expenses, expenses here. So if you look at our question that we have, we are just going to apply that one, that T account. If you come here, that T account now of disposal. So this is our disposal now for also equipment that was disposed. So we have got the cost price there, which is 45,000. So it comes on the debit side. Then we also have the amount that it was sold for 10,700. It comes on the credit side. Then we've got the accumulated depreciation on disposal, which is this one on the credit side. So it comes here 35,500. 35,000 500. So what is going to happen there is that if we add the debit, the debit is going to be a greater total there. So if you add the debit side, let's try to add that one, 10,700. We have 10,700. Then we add 35,500. Then we are going to get 46,200. So here it means we are going to have our 46,200, which is going to come here again, 200. So we only say 46,200 minus 45,000, we are going to get 1,200. So it means we are debiting disposal and crediting the profit and loss. And we are crediting profit and loss here is going to be an income. So it's going to be a profit. So our 18 there, the response that we have there is B. Then you go to number 19. If you go to 19, number 19 is saying what reduces accumulated fund. Remember, accumulated fund is the same as a capital in a profit-making organization. Accumulated fund is the term used in not-for-profit making organization. So we are just going to see which one is going to affect the accumulated fund there. So remember, the term loss and profit are used in a profit-making organization. So it makes C and D out of there, and then we are left with the excess that we have there. So whenever we make a profit in a not-for-profit making organization, it's going to be excess of expenditure over, excess of income over expenditure. If it's a profit, then if it's an expense, it's going to be an excess of expenditure over income. Then it's a loss. Excess of expenditure over income represents a loss. So here the question is saying what reduces accumulated funds. So we know that what reduces capital, it will be a loss in a profit-making organization. So the same here, what is going to reduce accumulated fund is an excess of expenditure over income, which represents a loss. So 19, we have got A there. 19, our response there is A. Then we go to number 20. On number 20, the question is saying which of the following costs is not easily traceable to the product being manufactured. So we've got direct and indirect expenses, and this one is an indirect expense that is being asked here. So if you look at factory electricity, factory electricity is an expense that you can not easily trace because it's only charged for all the be it the departments that are there, and we cannot easily trace it to a particular unit, so it becomes an indirect expense. So let's look on at other options that we have. We've got machine operators wages. Machine operators wages, we can see that we can directly allocate it to the production of a certain product, because this one we are seeing that the person who is operating the machine that is producing the product is being paid the wage, and that becomes a direct one. Patent fees, we know that these are also direct expenses, and then raw materials also, we know that we calculate them there to get the prime cost as direct materials. Remember, we also have indirect materials, but the raw materials come as a direct expense. So we are left with A. So A is our most appropriate response that we have there. Factory electricity. Then we go to number 21. So if you go to number 21, number 21 reads which items are credited to a partnership appropriation account? Which items are credited to the partnership appropriation account? So you see that what is credited in the appropriation account is income or profits. So you see that interest on drawings, we add them in the appropriation, so they are going to come on the credit, and then also share of profits also come on the credit. So this is what we have in terms of 21D is the most appropriate. Then we go to number 22. Number 22. On number 22, it's saying a motor van with a cost price of $7,000 at an accumulated depreciation of $2,500. It was sold for $3,000. The profit or loss made on the transaction was. So this, we are going to apply the same method that we used earlier of saying we open a disposal, and we are going to say The cost, we put it on the debit, 7,000. Then the amount that was received, here was sold for 3,000, comes on the credit. And then the accumulated depreciation, 2,500, also come on the credit. So if you add here, you are going to get 5,500, which is less than 7,000. So it means you are going to have a 7,000 here and a 7,000 here. And then if you say 7,000 minus 2,500 minus 3,000 there, you are going to get 1,500. So the balance is on the credit side, 1,500. So you are crediting disposal and debiting the profit and loss. And remember, we said whatever is debited in the profit and loss is an expense. So this becomes a loss. So you've got a loss of 1,500 that is there. So you've got A there as our appropriate response. So go to the next one. You now go to number 23. You go to the next page. On number 23. And on number 23, the question reads, what is the reward obtained by shareholders for investing in a company? And we know that the reward for investing in a company, we call it dividends. Dividends becomes the reward that shareholders get as a share of their profits. This is B, so B becomes the correct there. They are not given salaries. They are not given salaries, but they are given dividends. Then we go to number 24. An employee reviewed business information to a competitor, which business ethic was not observed there. Obviously, there is lack of confidentiality there. There's lack of confidentiality. So confidentiality explains not divulging information concerning the private operations of the business outside to the outside world. Maybe this information might be dangerous because our competitors might get hold of this information, and it won't be a nice thing for the business. So confidentiality there is the most appropriate that we have. We have confidentiality there on 24B. Then we move on to the next question, which is now number 25. Number 25 is saying, which of the following is a nominal account? Which of the following is a nominal account? And we know that a nominal account represents those accounts that are temporary, that are not permanent, that are closed off at the end of the period. Remember, expense account, income account explains, or they are part of a nominal account. So we are just going to look of a typical account that we have there. So we have got rent received as an income account. So that becomes a nominal account that we have there. Rent received, which is D. Then we go to the next one. Now it's number 26. We can go to the next one, which is number 26. And we look at number 26 is saying a sole proprietor took goods worth $700 at cost price for own use. What is the effect of this transaction? So these goods are taken for own use. So whenever goods are taken for own use, we call them drawings. So we are going to have drawings affected there. We are seeing that drawings is everywhere on the responses that we have. So we can check on the other response. But basically, these goods are drawings. So it means they're going to increase the drawings. So we can go where they are increasing drawings there. We see that C and D are representing an increase. So we have C and D there. And then we check on the other responses on the other side, which one is now being decreased. We have got sales and purchases. Remember, depending on the inventory valuation system that is being used, we are going to open a purchase account or open a trading stock account or inventory account. So that makes sales out, and then we are left with purchases. So purchases, there's a decrease in purchases and an increase in drawings. A decrease in purchases and an increase in drawings. So we have got C as our appropriate answer that we have there. C is the most appropriate. Remember, this question is not asking about which one to debit, which one to credit. It's asking about increase and decrease. So when we have drawings, the drawings are going to increase. So we have an increase. So let's go to the next one, which is number 27. Number 27 is saying a trader had the following information and what is the gross profit for the year. Right, we've got sales, returns outwards, returns inwards, purchases, and carriage inwards. So basically, we are going to go through and try to find out how we can arrive at gross profit. But remember, we say sales minus cost of sales to get our gross profit, and also to get the cost of sales now. Also, we have to go through a formula, cost of sales, where cost of sales now, we say opening stock, we add purchases, we less purchases, returns if they are there. We add carriage inwards, and then we subtract closing stock. So we're going to see what's going to happen in terms of there. Then we have got sales also. Sales represents a positive. Then we've got the returns outwards. The returns outwards, they are returns on purchases. So they are here. They are reducing the cost of sales. So when they are reducing the cost of sales, it means they are also increasing the profit, because cost of sales are going to reduce the gross profit. So this one is an increase. So returns outwards, we saw it as a positive again. Then returns inwards, this is reducing sales. This is reducing sales, and sales is increasing gross profit. So so this one, we saw it as a subtraction, returns inwards. And then we've got purchases. Purchases is part of cost of sales, is increasing cost of sales, so it's reducing gross profit. So we also subtract it. Carriage inwards, we are adding it here. So it's increasing cost of sales and reducing gross profit. So we also subtract it here. So this is how we arrive at there at the gross profit. Then we are going to say 15,500 plus 2,000 minus 2,500 minus 8,000 minus 3,000, and then we get 4,000. So here our answer is 4,000. So we're going to have our 4,000 here. Then we move on to the next question that we have, that is number 28. Right. When you come to number 28, it's saying which subsidiary book is part of the double entry. Subsidiary books are books of original entry. Remember, information from the source documents are entered in the books of original entry. These are day books. These are also subsidiary books. So we have got cash book. Cash book is the only subsidiary book that is part of double entry. And remember, the cash book is a bank account and cash account summary. We've got both a bank account and cash account inside the cash book, and we know that cash account is part of the double entry, and bank account is also part of double entry. So that makes A the most appropriate there. The other ones they are not part of double entry. We've got purchase day book, returns outward book, and sales day book. Right. Number 20 is saying which of the following is a real account. Which of the following is a real account? Right. A real account represents an asset account. And usually fixed assets are the ones that are typical real assets, and it's a permanent account. Permanent meaning it's carried on from one financial period to the next financial period. So but if you look at the first one, you've got capital account. This one is a personal account, so it's out. Capital account is a personal account. And then also we are seeing that sales is closed at the end of the financial period, then it's a nominal. Then we have got stationary. Stationary can be a nominal account, and also it can be it can be also a real. So it's not directly a real account, because stationary, remember, it's an expense. We can have stationary expense under operating expenses, but we can have stationary as part of stock that is stationary, that is not used in the end of the period. So in that way, when it's now carried to the next financial period, it becomes a real account, but it's not directly a real account. But so we're left with fittings. Remember, fittings is a non-current asset. Remember, furniture and fittings are the non-current asset or fixed asset. So B becomes a real account. So we have got B there. Then we move on to the next one. Number 30. Number 30 is saying which error is reviewed by a trial balance. Remember, we listed some of the errors that are not reviewed by the trial balance, which are error of commission, compensating error, and error of principle. So we are left with the arithmetical error. Arithmetical error is the error that we have made a mistakes in the additions, maybe in one of the accounts. This one is obviously going to affect the balancing of the trial balance. So it's a reviewed trial balance error. So we have got A there. Then we go to the next one. Then we go to profit on disposal of non-current assets is recorded on the profit on disposal of non-current assets. Remember, we said the profit on disposal should be on the credit of the profit and loss, because it's an income. So if it's on the credit or the profit and loss, it's going to be on the debit of the disposal. So we are going to debit the disposal side. So number 31, we have got C there. That response is on C, debit side of a disposal account. Debit side of a disposal account. Then we go to number 32. Number 32 is saying if credit sales are omitted from the income statement, the effect is to this is credit sales are part of sales. Remember, total sales is equal to credit sales plus cash sales. So if they are omitted, it means remember, sales increase the profits. So if they are omitted, it means the profit figure is going to decrease, both the gross profit and the net profit, because the sales are adjusted before gross profit. So gross profit is going to be affected and then net profit will be affected. So we are going to have a decrease in gross profit and a decrease in net profit. So this is what we have there on number 32. We have a decrease on both net profit and gross profit. Then we go to number 33. On number 33, the question is saying what makes up the shareholders' funds. We know that the shareholders' funds are the owners' funds, and we know the owners of a company are called shareholders. So what belongs to them are the share capital. Obviously, is the first thing that belongs to them, and the profits that they are going to make also belongs to them. So response A is authorized the share capital and the retained profits. But authorized share capital, you know that this is not part of the capital. It's not capital of the business, but it's the maximum that is supposed to be raised in terms of the share capital. So it's not part of shareholders' funds. What is the part of shareholders' funds is the issued part, the part of the authorized that has been issued. But if the issued is equal to authorized, then the figure for authorized can be said to be part of the shareholders' fund. So we have got to B, issued share capital and retained profits. So you've got to be there. Issued share capital and retained profits. Loan capital is a non-current liability. So I'm not going to include it. It's on C and D, so it makes C and D out. Then you go to the next one. On number 34. Number 34 is saying the following information is for a partner on a partnership, in a partnership business. Then January 1, 2017, capital was 100,000. Then on 30 June 2017, the partner introduced additional capital of 20,000. The partnership agreement said that the interest on capital is charged by 10% per annum. The interest on capital debited to the appropriation account was. Right. The question is asking us to calculate the interest on capital. So what we are going to do is the rate is 10%. We're just going to say 10% of 100,000. 100,000 stayed the whole year in the business. So we have no problem there. We say 10 over 100, then we multiply by 100,000. Then obviously we are going to get $10,000 there. But then we have got an additional capital that was there. So we are going to also say 10 over 100 times 20,000. But this additional capital was introduced on 30 June 2017. So it means it stayed July, August, September, October, November, December. So it stayed 1, 2, 3, 4, 5, 6 months. So it goes to 6 months. So we make a proportion in terms of the months that the capital was in the business. Then we multiply by 6 over 12. And obviously this one is over 1. And if we do that, to say 10% of 20,000, we're going to get 2,000. Then 6 over 12 is half year, it's 1 over 2. Then half of 2,000 get 1,000. So to get the total now, we are saying 10,000 plus 1,000, then we get 11,000. So our answer there is C. Then we go to the next one, which is number 35. Number 35 is saying the following information relates to a partner in a partnership business. And then we are given the information of current account, credit, share of profits, partner salary. Then they're saying current account balance on 31 December was. So we are going to open the current account. So this is the current account. So what we are going to do, remember this one is a credit, so it's on the credit side, 4,000. And then we have got a share of profits. We know that it comes on the credit side. And we have got partner's salary also. Partner's salary comes on the credit side, which is 1,600. There we have got 1,600. Then we have the drawings. The drawings comes on the debit. Interest on capital comes on the credit again. So let's try to calculate there. If you calculate 4,000, 4,000, then you add 13,200, then you add 1,600, then you add 900. You get 19,700, then you subtract 7,000. So here you get 19,700. Then you subtract 7,000 to get the balance there. Then we're going to get 12,700. So you get D is our appropriate answer there. Then we go again to check the next question that we have. Next question number 36. The share capital of a company is made up of the following. And then the directors of the company recommended an ordinary share dividend. It is recommended an ordinary share dividend of 5 cents per share. So remember, this explanation is saying 5 cents per share. So it means we need to see the number of shares that were issued, part of issued. We are not concerned about authorized, remember. Authorized is just a disclosure procedure that we are communicating that this is the maximum that is supposed to be raised. So on issued, we have got 1 million. So what we are going to say, we are going to say 1 million times 0.05. Then when you get calculate that, we are supposed to get 50,000. So $50,000 becomes the answer that we have there. Then we can go to the next question. Now we go to the next question that we have there. Next question is number 37, and it's saying a business bank statement showed an overdraft of 400. The following information was available. And presented checks as 300, deposit not credited as 1,400. These are also uncleared of 1,400. So what we are going to do there, they're asking us the balance as per cash book. And we are supposed to prepare a bank reconciliation. And remember, if you are starting with balance as per cash book, you add and present it. And then we less uncleared, which is deposits not clear, not credited. You are starting with balance as per bank statement. So you add unpresented, and then we less uncleared, which is deposits not credited. The opposite is true when you're starting with the balance as per cash book. We are going to add now deposits not credited, which is uncleared, and then you subtract and present it. So here we have an overdraft. It's a negative figure. Then we now add unpresented, which is 300, and then we less it was not credited, which is 1,400. So if you say negative 400 plus 300 minus 1,400, you are supposed to get 1,500 as a negative again. So whenever it's a negative in the cash book, it will be a credit balance. So 1,500 credits. So C is the appropriate answer that we have there. Then we go to the next question. The next question, number 38, is saying a trader had the following assets and liabilities on 31 December 2016. We have got current assets, current liabilities, and the non-current liabilities. And then also we have non-current assets. Then the question is saying the current ratio. The question is requiring us to calculate the current ratio. Remember, to calculate the current ratio, we say current assets as to current liabilities. And our current assets there, we have 2,000. And then our current liabilities, we've got 1,000. And then to find the ratio now, remember this side should be 1. We say 1,000 divided by 1,000 both sides. The figure for current liabilities. And obviously here you are going to get 1. 1,000 into 2,000, you get 2. So 2 as to 1 is our answer. So 38, we have C. Then we go to 39. We go to 39. 39, we have got a business provided the following information. The net profit was. So this one is opening capital, additional capital, drawings, and then we have got closing capital. Remember, this is a summary of the last part of the balance sheet of a sole trader. And the formula that is there is opening capital, we add additional capital, we less drawings, and we get closing capital. So here, opening capital, we have 61,000. And then we add opening capital, additional capital, which is 4,800. Then we less our drawings, which is 3,300. Then it is equal to closing capital, which is 76,700. So obviously now we want to make, remember we have got the figure for profits. We have got the figure for profits that we have omitted there. When we say we add the additional profit, we also add the profit. Here we add the profit. So we have got an additional profit that is there. Additional profit that is there. We've got an additional profit that is there. So this profit is the one that is asked. The net profit is the figure, is the P that we are asking there. So we can make P the shadow of the formula now for us to find the figure for profit. So to find the figure for profit now, we are saying if you make P the shadow of the formula there, it becomes P is equals to, we have 76,700. So we are, when you put 61,000 the other side, it becomes negative. So it's say minus 61,000. And this one is 4,800, it becomes negative again, minus 4,800. And this one, we are saying minus 3,300 for drawings. When it comes this side now, it becomes positive, plus 3,300. So when we say 76,700, we can try to calculate that one. 76,700. Then we subtract 61,000. And then we subtract also 4,800. And then we add 3,300. Then if you do that, you are supposed to get 14,200. So here, the answer that we get now is 14,200. So remember on the formula there, there's a profit that was omitted there. So here also it means our subtraction sign now is here. So we are saying 61,000 plus 4,800 plus the profit figure that we are not given minus 3,300, we get 76,700. Then here now we are making P the side of the formula. And after the calculation, we are getting 14,200, which is our A, which is here. You can check there in terms of the symbol that we have for A is A, for 14,200 is A. So this is what we have. And then we have got the last question that we have, number 40. The following details relate to a trader's general journal on 31 December 2017. We have got the suspense 400 and no discount allowed on the credit side on 200. And then we've got discount received on as 200 also. Right, so this is a journal entry that is there. And then they are saying which error was corrected there. So we are seeing that the most important part is that we have got a discount allowed being credited and discount received being credited. And we know that out of these two accounts, the one which is supposed to be credited is discount received because it's an income. All incomes are credited. So it means the discount received was the one which was which is the figure which was put in discount allowed. So when by crediting discount allowed, it means this figure was being removed in the discount allowed. So the question is saying which error was corrected. We are now going to A, saying discount allowed and discount received were both overstated. We are both overstated. So it doesn't mean that because we know that our discount received, the 200 was not there. So it was understated. The 200 was not there, so it was understated. And also the discount allowed is being credited there. Is being credited there. You can see that the discount allowed is being credited there as a correction. So what it means is the discount allowed is being credited here. It means initially it was debited in error. It was debited in error. So now it's being credited to remove the debit that was entered. So we are seeing that the most appropriate that is there. If you look at A, discount allowed and discount received were both overcast, which is not correct because this one was undercasted, this one discount received. Then B, discount allowed and discount received were both undercast. It's not true because this one 200 was on the debit side of discount allowed, and the discount allowed is a normal debit entry. So when this 200 was on the debit, it was an overcast, which is not correct. Discount received debited in error to discount received. This is not correct because this error, this is not correct. The explanation is not correct here. Then we go to D, discount received debited in error to discount allowed. This one is correct now because we are seeing that initially the percent that we had was that we had a discount allowed at 200 on the debit side of the discount allowed, which was not supposed to be there. Then on correction, we removed it by crediting discount allowed, which is this entry. And then we entered in the right account, which is discount received, the 200. So these are the two entries that were made to correct, that are on the credit side. So D becomes correct, which is saying discount received debited in error to discount allowed. So we have got our D as the correct answer there. Right, that is what we have, guys, on paper one. Stay tuned for more videos. As we prepare for paper one that is coming soon, stay blessed and still hang on there. We will make it. So those who haven't subscribed, please subscribe and share. With that, we'll meet again on the next video. Right now, I'm out.